India's manufacturing sector continues to see growth with some temporary impact of global slowdown. This according to FICCI's manufacturing survey that assessed 11 major sectors with over 400 manufacturing units responses. The survey also highlights that the existing average capacity utilization remains at 75%, reflecting a sustained economic activity. As per the survey, there are signs that cost pressure is softening for manufacturing units. 73% of the respondents say they are facing a rise in the production costs compared to more than 90% who faced cost pressures in the previous surveys. 58% say they reported higher production levels in Q3. So cost pressure is easing and production levels are on the rise. Let's take this forward by Subhrakant Panda, FICCI's President and Managing Director at Indian Metals and Ferroalloys. Thank you very much for joining us, Mr. Panda. Let me straight off ask you for your outlook, the Q4 outlook for the manufacturing survey, for the manufacturing sector, according to companies surveyed by FICCI.
So as you stated in your opening remarks, Parikshit, I think the momentum in manufacturing is continuing. And we see that with 58% reporting higher production in Q3 and over 50% of respondents expecting further higher numbers in Q4. And capacity utilization has actually inched up to 75% because in the previous survey it was at 70%. And if you recall, we had an interaction then where I had made the point that we're getting to that level where companies will start pulling the trigger on their investment plans. And I believe that is happening. Of course, what the survey points out is that 47% of the respondents talked about investment plans in the next 6 months, which is higher than the previous quarter. And according to some of the data that I've seen from CMIE, private sector project announcement as on December 2022 stood at 6.25 trillion rupees, which is up 80% from the previous quarter and 130% year on year. Now, these are announcements, of course, and I guess the impact of various states having their investment summits and going out aggressively to attract investment. Now, even if you assume that not all of this will come through, but it still is a very positive sign, which shows that there is confidence in the Indian economy. And if there is a concern, if there is a drag, it is about what is happening in advanced economies where they continue to battle inflation. After what looked like the retail inflation in the US was coming under control, it's ticked up again. So those are some of the concerns, and of course, not to mention the continuing conflict in Ukraine, which is creating uncertainties as far as supply chains are concerned. So net, I would say that as far as India is concerned, there is continuing confidence in the economy, which is reflecting in terms of greater announcements for investments. But it is also a time where I think we have to remain alert to how things around us play out.
Right. I'd also like to ask you about the hiring outlook. Are we going to see increased hiring in the next fiscal as well? What are the hiring trends that you've come across? And what about capacity utilization at this juncture?
So as I mentioned, let me deal with the capacity utilization question first. As I mentioned, in the previous survey, capacity utilization on average stood at 70%, and that has moved up to 75%, which is encouraging. And if you look at some of the sectors which have reported more than 80% capacity utilization, these are auto and auto components, capital goods, paper, petrochemicals, textile machinery, etc. These are all above 80%. And if you look at some of the laggards, these are chemicals and pharmaceuticals, machine tools and metal products, surprisingly. But having said that, I think the reopening in China is a positive. But we also need to look at certain other measures which can provide a boost to sectors like steel, metals and chemicals and pharmaceuticals. And I'm specifically referring to RODTEP, because these are some of the sectors which had been excluded. And I believe it is, the time has come for the government to take a relook at that. That apart, as far as hiring is concerned, what the survey threw up is that there is clearly, hiring is positive, but it remains below potential. And I guess that is a sort of a net effect of, certain sectors looking at layoffs, etc. And interestingly, there were about 24% of respondents who referred to a concern about adequate, trained manpower being available. But overall, I think hiring remains positive, if a little below potential, and it could also be a sort of a little cautious approach to where we stand at the moment.
Okay, you've also said that the exports growth has started to wane. Would companies be looking to set up additional capacity, or does the global environment does not instill enough confidence right now?
Well, a decision to invest is a combination of both domestic demand as well as the export markets. And as I mentioned, I think the fact that India has a large unified domestic market and the economy is chugging along quite well, I think is a very, very positive factor. But of course, the slowdown or the impending slowdown in advanced economies, not to mention the continuing battle with inflation globally, and rising interest rates, because as you mentioned about cost of production softening but still continuing to rise, a great deal of that also comes from increased borrowing costs, where the average interest rate has moved up to a shade below 9.4%. Which is close to 100 basis points as compared to the previous quarter. Now, this is, it's obviously a result of all the steps being taken to contain inflation, but these are some of the areas of concern. And coming to the export question, clearly, the pressure is showing. Although India is doing well, we'll get to 750 billion in exports this year, but concerns do remain as far as advanced economies are concerned.
All right, Mr. Panda, thank you very much for joining us here with the FICCI Manufacturing Survey. Let's